Hello, and welcome to Rocket Fuel, your daily update of everything that's happening in the Rocket Pool community. My name is Wack. Today is August 19th, and we're going to be covering Rocket Pool and Ethereum news in today's episode. So we're going to be talking about Sckuzzle's analysis on node operator behavior in the Rocket Pool community. We're going to be talking a little bit more about the RPL benefactor. We're going to be talking about updates to the Beaconchain website, their version 2. On the Ethereum side, we're going to be talking about OP mainnet turning off fraud proofs and why that's happening, the growth of Euro stablecoins, Uniswap pools, CoWSwap, and a whole lot of other things. So let's get started.
10, 9, ignition sequence start, 6.
Okay, so we're going to get started with today's episode with this research from Sckuzzle. And this came out of the ETH-only validators discussion that is taking place, and that people are discussing quite a lot. And it seems like we're getting closer and closer to getting an RPIP on that. Anyway, there were some questions that I guess Sckuzzle had about how node operators behave in different situations. So he went back and did a whole lot of research on this, and he said he had some kind of questions that he was thinking about. So like nodes that didn't need to top up, nodes that didn't need to top up but they did anyway, nodes that needed to top up and did top up, nodes that exited and topped up, nodes that exited to get RPL rewards but didn't top up, nodes that fully exited, nodes that freshly didn't top up, nodes that didn't top up previously either, nodes that grew PETH, that's protocol ETH, and other things like increasing ETH while being below the cliff. So these were some of the questions that Sckuzzle had going into it. And he says, I'll share some visuals. It's a tease, but I want people in ETH-only LEB8s to commit to changing their minds if the results don't match their expectations before I give it away. So Val here then came up with some predictions of what he thinks things will look like, and people were starting to wait for the results, and then Sckuzzle started providing. So the first one here was just a distribution weight by node, like what percentage of node operators are in which of these situations, and that was a bit too noisy as a chart. So then kind of started showing what the price changes like over the different intervals. But even with this, like you can see that the previous non-top up group started growing a lot, and the didn't need to top up group started going down by a lot over the course of like 16 months, I think. And then here you have behavior weighted by nodes as well. So then there's some analysis here about what's kind of going on, saying that we see a lot of nodes that didn't need to top up start, and then leading to an increasing amount of them chose not to. It says with 60% of active nodes consistently choosing not to top up. It says we also see about 2.5% of nodes per period opting to exit everything, and almost no nodes exit to stay above, exit to buy, or stake existing RPL. It says only 5% of nodes need to top up and do so. The picture changes completely if we look at weighting by staked RPL, which are the nodes whose behavior are going to dominate the RPL ratio. So here I had a closer look, and you'll see about how the numbers have changed in that time. And then this is distribution weighted by staked RPL and how that's changing as well. So here it says, we're still seeing only 8% of nodes weighted by RPL falling into the topping up category. So that's actually a really small number. Full exit nodes are down to about 0.1% though. So what Sckuzzle here is seeing as well is that node operators aren't actually fully exiting, which is actually very interesting, and it's a good observation. And then Sckuzzle goes on to say other main weighting strategies by node size. So then has a look there as well. And this is showing inflows and outflows and how much RPL is going in there, and like what the flows are. So it looks like the outflows are kind of consistent but like having a down month, and the inflows are kind of vacillate going up and down, but it looks like they're on an uptrend. And then it says correlating it with the RPL change, it looks like there's a negative correlation. It says there's a clear negative correlation between price and net flow of staked RPL. So skipping ahead a little bit, you can see here that some of Sckuzzle's big takeaways saying that node behavior changes hugely with node demographic. Larger nodes are more likely to be and remain above the cliff. Nodes that are above the cliff don't tend to exit, even though they are the ones most hit by the falling RPL price. And so a lot of small nodes are not topping up. very few nodes stake existing RPL versus buy to stake. This could be an artifact of them holding RPL on non-node or withdrawal address, and the number of nodes topping up is quite small. The number of nodes are exiting either to get above cliff or to buy RPL is even smaller. So those are some of Sckuzzle's takeaways. That was from yesterday. Since then, Sckuzzle's been providing a lot more information and charts. So here, like what percentage do people have their collateral at the point at which they're exiting? And zoomed in on this chart, it looks like people are like kind of falling under 10% collateral and then their exit, and Sckuzzle says that it seems it mostly happens just as people fall under, but there's quite a few that exit in the 10 to 20% range too. And then here, Halilo just asked for some zoomed in information. So the peak is just over 10%, but that's the previous period. So like the previous period finishes, the person's just above 10%. Then during that period, the ratio goes down. So they go below 10%. So in that period, they wouldn't be getting rewards. So what ends up happening is that that person then just exits. And here Halilo says, so it would just be dropping under, I think. To be honest, this just reinforces my opinion that a cliff has to go. Also tells me we don't need to worry about lower collateral operators as much when deciding how aggressive to go with ETH only commission. And here non-fungible outcomes, that tells me dropping under the thresholds for rewards is an action trigger for folks. And Sckuzzle says, I'm not sure we can actually draw that conclusion. It might be that they're just as likely to exit all percentages below 10%, but since most nodes are only barely below 10% initially, we also see most occurrence there. So it's because that's where Sckuzzle's arguing that most people enter at 10%, so or just above 10%, so they're the ones who are then going to be exiting as well. That's just where the nodes are. So we'll have to do more research into what it looks like. So there's more discussion going back and forward between Sckuzzle, Halilo, Ramana, and others. And then there's information here on mini pool distribution. And here Halilo says we've got a big cluster of nodes that never topped up under 4%. The exit distribution is basically the opposite, with a cluster near the cliff and barely anything under 4%. And then the conclusion, of course, is here that the cliff has to go. But there is, that's basically brought you all up to date with the information. So Halilo says when people drop under, they have three options: they top up, they exit, or they do nothing and ride it out. So he says the removing a cliff for RPL rewards would probably eliminate a lot of B, which is people exiting, which is what we don't want, but also some of A, which is people who are topping up. So I'm trying to find the place where Sckuzzle said this, but he says, I think we need to look at the rate of exit, those below cliff. No, that's not the right one. What he found actually was that there is still a number of people who are still topping up, and we don't want those people to stop topping up, basically, sadly. But I think there's still a little bit more data, the research and data analysis that needs to go into this, and see what else we can pass out this information. But truly, this is really amazing work from Sckuzzle. So if you have any questions, if you have any ideas for what kind of data you want to see, then definitely dig into this thread, have a read through it, and you should definitely ask your questions. I think that there's some really good stuff here. So that's really cool. Okay, next we had Thomas coming into trading yesterday, talking about the RPL benefactor. So for those of you not following along and didn't watch the last episode, the RPL benefactor has made a return to the Rocket Pool community. They were given 1,000 ETH from Thomas, 1,000 RPL from Thomas to distribute to the Rocket Pool community. Thomas here came in and joked. He says, Benny is a scammer. He told me in a DM that if I sent him 1,000 RPL, he'd send me 2,000 back, but instead he's just sending it to random people. So it really has increased the mood in the community. People are so much happier. Thomas says, I asked for my money back and he said he couldn't give me my money, but offered me a VIP ticket to Visa and 2 months of free OL. I don't even like Visa, but there was a reply here from Lee saying that this was a skill issue from Thomas, and that they actually sent RPL to the benefactor and got double back. Let me just see over here. Yeah, there's a oh, that's the long one. So yeah, here Lee sent actually, let's just go to Lee's, have a look. Lee sent 5 RPL to the benefactor, and then the benefactor sent back 10 RPL. So Lee was one of those people who got the 2-for-1 scam, but actually ended up working for them, and they got a bunch of RPL. A bunch of RPL, yeah, from the benefactor. So if we actually go and have a look at the benefactor's address right now, they have 437 RPL remaining out of 1,000 that Thomas gave. It looks like they're doing most of their distribution through the Disperse app. So that's what Benny's doing. So I think what's happening is they are collecting addresses from the community, and then he's going and giving those out in chunks. It looks like. So yeah, there's still some RPL left. So if you haven't asked for RPL, the rules, of course, as always, are that everyone will get RPL. I think that's been the rule for the last few times. Let me see if I can see a message from Benny right now to show you all. No, I'm sorry, I can't find one right now. But here we go. Yeah, so Benny says everyone gets RPL. If you're active in governance or research threads or the forum, you get more. I have lists. If your name is on the list, you get more. Send me a message, make your case. Send 0x address and message, no ENS. So there's 437 RPL left. It looks like it's going to go fast. So if you haven't asked for any RPL yet, please reach out to Benny and ask. And the more, I guess, active you are, the more you will get. It looks like, looking at some of these transactions, it looks like they're going out in batches of 5, 10, or 20. So yeah, people have been getting some nice amounts. Okay, moving on to some staking news now. We've got some updates out of Beaconchain. Beaconchain, of course, is the explorer that lets you see what's happening on staking addresses and staking performance. It's really important website for people who stake. And here they're saying that we've just launched the latest feature drop in our version 2 beta, analyze performance trends with our new summary charts, track rewards over time with our new rewards chart, stay current with our new 60-minute summary view, and powered by an all-new Explorer running on ClickHouse. And then they've got some more information here saying, curious about your past performance, identifying issues after a new client release. With our summary chart, you can easily review your performance, whether you're checking per epoch, details, or taking a broader look at the weekly overview. And they've got some more information as well, saying next up is our new rewards chart, offering clear breakdown of your earned rewards over time, both consensus and execution, simple, straightforward, and effective. And then they've got information here saying, as previously teased in our screenshots, we've added a 1-hour option to the summary table. This feature is ideal for checking for issues after changes to your setup or keeping a close eye on the chain in real time. And they say, last but not least, much of the dashboard is now powered by our new ClickHouse exporter. It's already functional, but we're having big plans to enhance it, bringing data closer to the head of the chain and offering more advanced analytics in the future. So if you are interested in this, that you can go and give the thread a read. But yeah, great stuff from Beaconchain. And here, Butter, who is the co-founder of Beaconchain, he says, our latest Beaconchain update lets you compare your server's real-time performance as well as historical data. Below, you can see that each staker, Herleshki servers are performing differently. What could be the cause of this? Can't wait to ship this on mainnet. So it just lets you dig into data in a much cooler way. And yeah, you can go and have a look at that. So congratulations to Beaconchain for getting closer and closer to their version 2. Okay, moving on to some Ethereum news now, and here we've got news from Optimism, and they're saying the Optimism Foundation, so coming out of the Optimism ecosystem, saying Optimism Foundation disables permissionless fraud proofs, plans hard fork following security audits. And in the block here, I have an article about this where they talk about, just 2 months after initializing their permissionless fraud proof system went live, the increase in the decentralization network, they reverted the system back to permissioned operation after community-driven audits around several vulnerabilities within the system. So, all of the L2s currently still operate on a multisig, and they found an issue. Therefore, they have reverted their fraud systems back to just a team, I think, doing the fraud checks, or maybe there not being any fraud checks at all. But anyway, Optimism contributor OP Labs has proposed an upgrade dubbed Granite, which includes a hard fork on Optimism's layer 2 network to address the issue that would go into effect on September 10th. So, these companies have, these networks have these security windows where they let you know that there's going to be an upgrade coming in the weeks to come, and with that upgrade, people can get their assets off the chain if they want. But this I'm kind of conflicted about this, right? Like, this is how they work right now. Like, eventually we want there to be much more decentralization, but right now we don't quite have that. But they're all working towards getting that. And I think, with there being bugs here, I think it makes sense for now to use the powers that you have and to try to fix things before they get worse. So a few months ago, we got rules out of Europe and the European Union about stablecoins, and that came through their MiCA legislation, which is the markets in crypto something, I think. And one of the things that they said was, we don't want Europeans using US stablecoins anymore. We want people to come in and register with the European Union and offer Euro stablecoins. Well, one of the first groups of people to do that were Coinbase. So they set up the EURC, kind of like USDC, stablecoin, and they have now hit 50 million of this has been issued. And here Jeremy Allaire, who is the co-founder and CEO of Circle, says that EURC on the move, Euro stables starting to come alive. So he's arguing that there's more demand for Euro stables now. And where you can see here is really interesting. It's like the same old power law that we see with US stablecoins, USD stablecoins. You'll see that the vast majority of these are Ethereum and Base. So between Ethereum and Base, we have 48 million basically out of the 50 million, and we've got 2 million on Avalanche, 1 million on Stellar, and 1 million pretty much on Solana. So there's 40 times more of this stablecoin on Ethereum as there is on Solana. And if you count Base on there, then it's nearly 50 times more. So this is actually really great that stablecoin activity is happening on Ethereum. I'm surprised not surprised that Tron isn't there, but Tron is mostly used in the developing world, and they mostly use USDT on Tron. They've got a lot of stablecoin activity going on there, but for USDC and now EURC, we are seeing that this is happening on Ethereum, which is really, really cool. Here, Patrick has some analysis, and this says EURC has crossed the 50 million euro mark in market cap. EURC market cap is up 36% this week, fueled by the launch on Base, which already has 8 million on there, and a growth uptick on Ethereum. At this rate, EURC will be the number 1 euro stablecoin by market cap. And then they said that this is the largest MiCA compliant euro stablecoin. The only one larger is the euro issued out of Switzerland, but they have halted because of the bankruptcy of a bank, Flow Bank, that was working with that. So if you want to check out the stats, you can check out the DeFi Llama dashboard that Patrick links to. But yeah, like, this is just another area of real world assets coming on chain, coming onto Ethereum. And as these grow, then Ethereum grows, right? That's what we want. We want more and more of these settling on Ethereum, and that is awesome. Okay, got a little bit of a blast from the past here from Uniswap, saying that Uniswap version 2 pools are still being created. Now, what's really interesting here is that Uniswap version 3 pools are the ones that have the most liquidity, and Uniswap are actually in the process of working on their version 4. However, version 2 is still alive and kicking, and here you can see that in the last week, Optimism, there's been 342 new pools created. On Arbitrum, there's been 1,866 pools created. On Polygon, there's been 3,000 pools created. On Ethereum, there's been 118,000 pools created. On Base, there's been 512,000 pools created. So it just shows you that, like, over the last 6 months, this has all been growing on Base. The numbers have just been wildly successful, that people are still using Uniswap version 2. Now, Uniswap version 2 has one of the things interesting about it is that it has different liquidity parameters compared to version 3. So version 3 has concentrated liquidity, where you can set liquidity where you want, and then you get boosted rewards through if sales are happening in your liquidity zone. With version 2, it has I forgot the term for it. What's the word for it? It's like full something. The liquidity, basically, it's like full range, I think. Something else, it'll come to me. Liquidity. So when you add your stables, you add it in the ratio, and not your stables, your tokens. It tends to be a ratio, and then you just add liquidity across the whole range there. So it's really interesting that this is still getting so much use, and especially on Base. I think it's the meme coins on Base are using it because it's easier for liquidity purposes to get to use version 2 instead of version 3. Okay, I'm kind of covering two pieces of information with this one news thing here. So this is a post from the Ethereum Intern saying ecosystem shilling CoWSwap. So it says, as a trader, you must hate MEV. I do. CoWSwap uses off-chain solvers to get you the best price. It also offers limit orders and time-weighted average price orders, letting you DCA into the tokens that you want easily. It also has a MEV-free AMM for LPs and an MEV blocker RPC, so don't get milked. So basically the idea is, if you're using Uniswap and liquidity is thin, you could get sandwich attacked. People could arb your transaction with other places, and to use CoWSwap to fix this. Now, whenever I want to swap tokens, I always use CoWSwap, and that it just makes sense to me. It works the best. I always get either equal to or the best price, and I really like CoWSwap. But the other thing is, here I want to actually shill the Ethereum Intern account as well. So this is a relatively new account that has been posting for the last few months, and they're building up a following already, and they're actually like just getting the word about Ethereum out there and spreading good news about Ethereum, and kind of is sharing positive news about Ethereum. So if you are interested in getting some positive Ethereum news in your Twitter timeline, then definitely give Ethereum Intern a follow. With the usual Intern account, there's some memeing going on. There's some little tussles and stuff that happen, but overall this is actually a really cool account, so definitely give it a follow. Okay, next we are covering ETH Global, which is one of the annual Ethereum conferences that happens, but this is ETH Global Online. It says time is running out to apply for ETH Global Online 2024. So last year they had 2,000 hackers from 96 countries that took part in this, and you can take part in this as well, but the time is running out to apply. So they'll have hackathons and summits. It's going to take place from August 23rd, which is in 4 days time, all the way through to September 13th. And they actually have prizes worth hundreds of thousands of dollars. If we have a look over here, we can see that a lot of prizes have been given. So like, let me tell you. So Nethermind offering $1,000, Stacker Labs offering $5,000, Mina Protocol $20,000, Demo $5,000. I think it adds up to be like a couple of $100,000 in prizes. Yeah, $225,000 in prizes. So if you are interested in taking part in this, definitely put your name forward as soon as possible. These are the final days to apply. So get involved in that. There's a whole lot of money to be made. Okay, we've got this tweet from Mark Zeller here that I want to spend a minute talking about and kind of extrapolating from this. So Mark says, for the first time in over a year of zero growth, I'm seeing a net increase in followers on Twitter. Mark says, it used to be a weird equilibrium of accounts dropping off and new ones joining, but now it's consistently positive. My content hasn't changed, so this could be a market signal. And what's really interesting here is, crypto markets are waiting for retail investments to come back to crypto. And we tend to see this with some metrics before the price really. And some of those metrics are like people starting to follow, big accounts on Twitter. We also see this in view counts of YouTube channels and podcast listens for popular channels about crypto. So these are things like, Bankless, Coin Bureau, Unchained, even on Rocket Fuel, like the most popular my show ever was right around Atlas. The price was going up. There was a lot of engagement in the community and people were watching Rocket Fuel. But I started to see that my viewership started to tick up in November, like months earlier, basically, that I started to see that information going up. So Ben Cowan, who has Into the Cryptoverse, actually has a chart for this. He calls it the social risk. And the way that he measures it is views on YouTube channels, and as that number going up being a market indicator. And I think when people start to notice that this is happening, this is something that some people use as one of the metrics to start paying attention to who's in the crypto market. Now, Mark, of course, talks about Aave, and that's his area, his domain of expertise. And it could mean that people are getting more interested in Aave, which is a signal in itself, or it could mean people are getting more interested in crypto. Now, I haven't quite seen that same increase in views in Rocket Fuel. But once I start seeing that view, uptake happening, then I'm definitely going to start paying attention to it. I did actually see some view uptake happening in the last 6 months period compared to the 6 months before that. Viewership went up around 50% in that time, but I'm going to be looking for it to go up, like 100%, 200%, 500%. And I think once those kind of growth stuff starts happening, we'll already start seeing the price reflected that way as well. But it'll just be one of those things that you can use as an indicator if you so want. Okay, next we're going to talk about the breakout app of this year for crypto, and something that's getting a whole lot of people involved in crypto, even those who are outside of it, whether that's talking about it or actually coming on chain. And here Nick says it's hard to argue that Polymarket is not the crypto app of the year. This is on track to reach 475 million in volume and 75,000 new accounts in August alone. Those are pretty amazing numbers. It says it's universally cited by pollsters, pundits, normies, and campaigns. So this is specifically about the political aspect of it and about how it's getting coverage on like news channels, up there with other, betting and prediction markets. And then Nick says usage and relevance are only going to accelerate as we get closer to November. So this is leading up to the election period. And I think that this year has definitely been the year of Polymarket going into the election period, definitely. Like most of this, attention is coming from the election. I mean, I check Polymarket like three or four times a day, a few different markets just to see how things are changing. But this is one of those things that I think, as they bring on more markets and as they bring on, as they get more people involved in the ecosystem, they'll be doing some really cool stuff. Now, of course, that is not me saying that you should be gambling or anything like that. Like, I actually don't use Polymarket myself, but like, if we have a look at the election forecast here, they're showing 47% for Trump, 51% for Harris. So this is, a coin flip, but they've got all these different markets. They've got crypto markets, pop culture markets, sports markets, business markets, and science markets. And those other ones haven't really taken off in the same way that the political ones have so far. But I think they're getting people onto their platform, and once you have people on the platform, it becomes a lot easier to get them doing other things on there as well. Just getting them there in the first place is the important part. But yeah, this is definitely going to be the app of the year. They might be doing an airdrop maybe next year, but they're going to start making so much money with this once they start to tweak their numbers so it gets monetized better. Okay, talking about layer 2s for a minute. So here we have Figo saying that within the next 12 months, the ETH ecosystem will likely have, and then they go on to say that we'll have many stage 2 L2s providing layer 1 security, and L2s doing 10,000 plus transactions per second with EigenDA. So the whole L2 thing is just one massive FUD factory right now. And, I've tried to dispel it on Rocket Fuel sometimes, but all you all are convinced pretty much anyway. People like Anthony Sassano do it on the Daily Way and getting it out there on Twitter. And it's just one big mess, basically, with people kind of sharing their opinions back and forth. I think one thing that we could all say and agree on it, though, is we want these L2s to get to the stage 2 of decentralization, to have all those green checks on L2B, and Figo thinks that will happen within the next 12 months. I think that's actually really wonderful, because that's probably when we'll be in the full swings of a bull market. And with that bull market, potentially we could be using these L2s way more than we are now, right? And by them being fully stage 2, fully decentralized, permissionless, all that good stuff, we'll be in the best possible version of Ethereum. And with retail potentially coming in the next 12 months, maybe 15 months or so, we really need those L2s where there'll be cheap, fast transactions, 10,000 transactions per second based on EigenDA, which is the EigenLayer's data availability platform. And then Figo goes on to say within the next 24 to 36 months, so this is lining up for potentially the next bull market, maybe if the cycles keep going, we'll see that we'll have full composability between the layer 2s, or as much as possible basically within their own silos, and then layer 2s like Mega ETH will be doing 100,000 transactions per second, and everything, the fundamentals are developing. And here Chainyard actually replies by saying that this is actually going to happen much sooner, that AgLayer version 1 will come this year. That's Polygon's composability system, and saying that version 2 will come in quarter 1 or quarter 2 of 2025. So this is all really cool. It's coming along really well. Ryan Beckerman's then replied by saying there'll never be a silver bullet to L2 fragmentation across all of Ethereum, e.g. all major L2s will never run the same cross L2 atomic composability system. So if you're a liquidity or atomic composability maximalist, you might think this is bearish, but in reality it's bullish, because the full toolkit of fragmentation solutions will end up being amazing. And as very recently explained, layer 2 fragmentation is very natural to humanity, and atomic composability is overrated. So long L2s and ETH. So this is based on Vitalik here as well, saying synchronous atomic composability is very overrated in my opinion, blah blah blah. So if you want to follow that discussion along, you can follow those tweets. And finally, today's episode, I'm going to cover some other news. So here Zach XBT says that there's a suspicious transfer of Bitcoin. So 4,064 Bitcoin worth $238 million are current market rates, and that there's a transaction that's basically they were moved away from a wallet and sent to Thorchain, XCH, I don't know how to pronounce that, KuCoin, Change Now, Railgun, Avalanche Bridge, etc. So basically $250 million, it looks like has been taken from someone's account and has been sent to different places to swap / move / hide. And here a person asked Zach, is this Lazarus again? Is this North Korea? And Zach said it doesn't look like it because the behavior is a little bit different, but it looks like someone got scammed out of $250 million. So it's a really bad day for that person. I'm sorry for that person, but I hope you're doing okay out there, whoever you are. More likely is to be an exchange that somehow got its keys drained, keys found and hacked. But it's really bad. So we'll get more news about that, I think, in the coming days. But on that note, I hope you all had a lovely weekend. But that's the end of Rocket Fuel today. So thank you all for watching, listening, and being part of the Rocket Fuel community. I will see you all tomorrow. Bye.